Okay, Mark from Landmark Financial Services Group. It's day 4. We just keep going with the new vehicle tax credit, the new clean vehicle tax credit. Okay, so another limitation has now been put in place, and that is the credit is not available based on your income. Okay, what does that mean? So if your adjusted gross income is above $300,000 for a joint filer, 225 for a head of household, or a single filer of 150,000, if your income is above those limits, depending on your filing status, you will not be allowed to use the clean vehicle tax credit. Okay, so it is income limitation based. Now, one thing you're going to hear about is this idea that you can, instead of getting the credit on your tax return directly, like we've been used to doing, you can actually get the credit directly from the seller. Okay, so instead of waiting for your $7,500 to come on your tax return, you get it right then and right there when you buy it. Here's the kicker. Okay, if you do that and you get the credit, the dealer actually either pays it to you directly or reduces the price of the vehicle by that credit amount. Okay, and your income ends up being too high at the end of the year, you're going to need to pay that credit back on your tax return. So, for example, you get a $7,500 credit towards the purchase of a vehicle. You get it right then and there. They take it off the purchase price. And then when we go to file your return, and it just so happens you made more than 300 grand for a joint filer, you're going to owe another $7,500 on your tax return to pay it back. So that's a big and important step to consider that might flip you up. Believe it or not, there's still more to come, so you got to keep staying tuned.